Hello and welcome to the Hash for April 28th. It's me, Zack, Seward. We're joined by regulars Naomi, Brockwell, Jen, Sanasie, Will Foxley, and we have a special guest, Anna Bydakova, joining us all the way from Russia to fill in for Ben Powers, who is out getting a shot. All right, let's start this thing off. Who's got the first story? Will? Are we talking ETH?
We're talking ETH. So we hit an all-new high this morning, $2,700 per token, which, of course, historic price levels for the second largest cryptocurrency by market cap. And JP Morgan put out a note this morning talking about why Ethereum has been outperforming other coins, particularly Bitcoin, over the past year and what it looks like going forward. So they noted that the tailwinds for Ethereum maybe less dependent on leverage trading than Bitcoin. They put up a nice fancy chart showing that there's a lot more liquidations for Bitcoin traders than there is for Ethereum traders. They also listed DeFi and other native use cases for Ethereum as a reason for people buying spot and holding Ethereum versus buying Bitcoin and holding it. This just kind of points to the market around the two tokens. Ethereum is used kind of as a reserve currency in a sense for a lot of the native applications on Ethereum, like DeFi, where you can take out a loan using Ether and trade with that instead, and kind of protect your own liquidation levels. But with Bitcoin, you often go to these exchanges and trade around, use different leverage, and then when the market swings against you, you can lose a lot of money pretty quickly. So an interesting note from JP Morgan. Interesting that they're taking a look into Ether, which again is the second largest cryptocurrency by market cap. But it's quite a bit behind Bitcoin when it comes to price valuations. So I want to throw it right back to you, Zach. What do you make of JP Morgan looking at some of the altcoins out there?
I think it makes a ton of sense. It's been a very strong asset this year. I think it's really interesting. There was another story that we published today that was maybe like tangentially related. It was about Genesis, which is a crypto lender, which full disclosure is owned by Digital Currency Group, which also owns CoinDesk. But anyway, they issued their first quarter report. And an interesting thing in that was that they're seeing Ether comprise a bigger part of their loan book. And that suggests that big institutional players are sort of going to CeFi, borrowing Ether, putting it into DeFi to get additional yield on those assets, which I thought was really interesting. So clearly, I think there's a lot of maturation going on the Ether side of things. DeFi again provides all these applications, all these ways that people can make money on their idle crypto assets. So whether it's folks borrowing money to get into those networks or using their existing funds to play in the realm of DeFi, I think the interest in Ether is certainly merited given the amount of capital that's locked on some of these platforms.
Yeah, and just to add on to that, I think there's a few updates to the Ethereum blockchain coming up this later in the year, which are going to really put some more price pressure going forward. So, for instance, EIP 1559, which is a huge update to how the transaction fees on Ethereum work, it's supposed to roll out this July. It should put a lot of downward pressure or an upward pressure on the price of Ethereum, just because there's going to be Ethereum burnt per transaction, which is it's like a very novel way of doing any sort of blockchain transaction. And then in addition to that, and you have later in the year a possible ETH2 rollout, which has been in the works for years. And of course, that may or may not happen, but that would just kind of add to the narrative that Ethereum can ship the products that they're trying to ship. And I think that would squarely put it into competition with some of the other larger assets out there, including Bitcoin.
What are the chances of ETH 2.0 actually shipping well? Like, where do you put it? Because they've been promising this for a really long time. I'm excited, but what are the chances?
I think it's actually pretty good. So in a sense, they've already shipped half of it. The Beacon chain has been launched since December, and it's rolling, and it's a fully functioning blockchain outside of just settling the transactions that they're going to add on in the later half of the year. So like if you think of a blockchain, they typically do two or three things. Two of those being consensus between different people around the world. Everyone needs to agree on which transactions are added, storing data, and then sending transactions back and forth. They didn't do the last thing yet, sending transactions back and forth, just because they wanted to make sure that this proof of stake blockchain, which is bleeding edge tech, would work. And right now they've had almost zero incidents, looks really healthy. I know the most conservative Ethereum researchers out there are even pro shipping it by October of this year, and it's on the schedule to do it by then. And I think it could happen. Honestly, I do think it could happen by the end of the year.
Well, this report was really interesting, and I want to ask you a question. Why do you think that Bitcoin and Doge are dominating headlines when ETH is doing really awesome things and there are so many really interesting applications for it?
Yeah, no, that's a really great question. I think it goes into just kind of how like we think about memes and the legs that they carry. So Doge obviously has a huge advantage there. Just it's a joke currency itself, and a lot of times investments are memes themselves. So Bitcoin is a great meme. Like even its logo is a great meme. It's not necessarily incredibly funny, but it is a meme in the sense that it's an image that kind of can move around the space and everyone recognizes it and understands it. And so people can invest in it easily. Ethereum, I don't think has as much meme power to it. Like you don't see the Ethereum logo and necessarily know what that is. You don't necessarily know what DeFi is, but I think it might be going that way in the long run. And an increase in the price valuation definitely helps that out.
And Vitalik himself has a lot of meme power as well. I appreciate a good Vitalik picture or post or video. Like they're always fantastic.
No, you're definitely right there. V definitely has some meme power to him. You gotta leverage that to get the price up.
I set us up for a great transition. Okay, so we're gonna talk about Doge again.
Good job, Jen.
Doge is in the headlines. Mark Cuban was on the Ellen DeGeneres show on Tuesday, and he had a few things to say about the coin. Let's take a look.
Probably 2 years ago, people started talking about the meme online, okay, and started buying it. And probably within the last 6 months, the number of people buying it has just skyrocketed into the millions, and the value has gone up incredibly. And I'll give you an example. My son and I bought some for less than a penny. Jake, who's 11 years old, bought $30 worth, I think it was, and for less than a penny. Then it went up to 6 cents. He bought a little bit more. Then it went up to 40 cents, and now it's about 26 cents. So the question everybody wants to know is Dogecoin a good investment? And here's the reason I got Jake into it. It's not necessarily the best investment you can make, but you can buy it on Robinhood, and signing up and trading on Robinhood is free. So that's one thing. The second thing is it's about 26 cents per Dogecoin. So if you go and spend $5, $10, $15, that's a better bet, better investment than buying a lottery ticket. And you know what? It could go up. And the second part about it is if it doesn't go up and you want to spend it, you can buy merchandise on the Maverick store, hopefully soon on the Ellen shop. So it's also becoming a digital currency, which is crazy if you think back to its origins. But as overall, when someone brings...
Okay, I'm not going to troll Mark for saying Dogecoin because sometimes I say some pretty silly things and no one says anything to me. So I'm just going to leave it at that. But it is pronounced Dogecoin.
But some people pronounce it Dogecoin. It is a contentious question there. So
it is true. That's so cute.
I've never heard anyone say that.
Yeah, in the early days, I think it was like 50-50 because the early meme when it was just a misspelling of the word doggy, I guess. And so some people pronounced it like that. So, yeah.
Naomi, I'm gonna kick this right to you because of the face you were making throughout that video. What are your thoughts on what Mark was saying?
Well, I think that people think of cryptocurrencies as these things that will last forever and they're immutable forever and, they're a sure thing. Like maybe Mark is thinking of this in terms of gold, right? Like is gold a good investment? Gold is a thing that's always going to exist. It's not going to disappear. Now, the thing with cryptocurrencies is they need active development. They need bug patches. They need constant vigilance. And Dogecoin has not had that. So there was a good period there where there were no developers on Dogecoin that I could see. Like a couple of years ago, I was looking into it and I was like, who is actively working on this? And I asked around and I couldn't find anyone who could tell me anyone who is actually actively working on this. This may have changed, and maybe some devs have gotten back into the mix now. But the idea that these things, like, you can discover this asset and then be like, this is a good investment, it's always going to last, I really think people should push back against that narrative, because cryptocurrency is a very different kind of asset that requires a network of vigilant, smart people looking at the code and constantly updating it and upkeeping it. But I'm going to throw this to you, Anna.
I just want to contest what you just said, because like, obviously the mass, the psychology of the mass crypto investor is totally different. It's funny. Recently, Joe Wiesenthal of Bloomberg wrote an op-ed in his newsletter, basically showing on a chart that Dogecoin has been a better investment than Bitcoin all along, through the last 7 years, if you only look on numbers. And this is what most people look at. We've been discussing this with Adam on the podcast recently, and he said an interesting thing, Adam Bilivin, our podcast editor, that people these days often have the win the lottery strategy in life, which means people are not that eager to chase a good job. They want to win a lottery, get that lucky money, and just go happy with their lives. And in this sense, it's only logical for them to ape into something like Dogecoin, whatever the technology is behind it. Why should they care? They see the numbers go up. They invest 1 cent, they get 20 cents back. It's awesome.
I'm going to push back on that a little bit, because it's very short-term thinking, right? If we think about some of the dead chains out there that you could have said, this is a much better investment than Bitcoin, and then they died because they didn't have a use case. They didn't have a value. I'm not saying that Doge doesn't have a use case. Obviously, there are businesses accepting it now, but there are chains. I mean, Ethereum Classic, for example, just kind of went dead for a long time because people left it. And a lot of my friends were like, well, it's exactly the same as Ethereum. Let's buy it. It'll be a great investment. It's like, has it been a great investment? Is that the best place for people to put their money? Because I feel like at the end of the day, people are going to leave Doge because it's not funny anymore or it's old, and you're going to have these bag holders that got into it hoping that they would be able to ride the train as well, and they're just left with an asset that has lost its value because people just don't care about it anymore. I don't see what the cutting edge is of Doge that is going to make it a mainstay, but that's just my take there. I'll throw this. Sorry, Jen, I think that you were gonna add something there.
I was just going to add something to what Anna was saying. In the interview with Ellen, Mark said Doge is a better investment than a lottery ticket, which really speaks to what you were saying, Anna. But a lottery ticket is not an investment, and that was really sad for me to hear that he would say something like that. I mean, a lot of people look to Mark Cuban for advice. He's a smart man. He's made a lot of money, and to hear a statement like that on TV was kind of upsetting. But Zach, what did you think of the interview?
I don't know. Doge is an assault on meaning and is about nihilism. And I just get in a dark place when I see stuff like this. Also, just talking about crypto is so cringe. Just watching that video, I was like, man, do we sound that cringe when we talk about crypto? Because I was not inspired to talk about crypto after watching that. So anyway, Doge puts me in a sad, dark place where the nihilism starts flowing, and I just don't know what is meaning. What is a good investment? Does it matter? I don't know. So
what is life?
Hello, darkness.
What's the worst topic,
Hello,
NFTs or Doge?
Both are an assault on meaning.
I'm so sorry.
I should just give up and just embrace the nihilism, but it is hard to do.
Guys, you're inviting so many Doge lovers to come and hate on this video right now. They're going to be like, but my bags. And we're going to be like, I'm sorry.
Yeah, they would be, what do you mean a lottery ticket is not a good investment?
Yeah, I mean, I'm with Anna on that.
Go for it. Yeah.
Oh, no.
All right.
All my life investments are not
let's wrap this up, folks. Let's wrap this up. Let's shut it down before the Doge army gets here. After this, we're going to talk about Tether on Coinbase Pro. Another fun topic to discuss. We will do it after this break. Thanks for watching The Hash. All right.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money in a live virtual experience. Consensus by CoinDesk. Register today.
Okay, to the next piece of news. Coinbase postponed listing Tether or USDT until next month because reportedly they have to fix some technical issues. Now, Coinbase just announced it's going to list Tether about a week ago, and it sounded like a vindication for Tether. You know, like all those people who had been saying all along that, you know, Tether is suspicious, maybe it's not fully backed, maybe it's too many Tethers just printed out of thin air and there's not, you know, that there is no dollars backing them. It was like all those people were told, now get that. Coinbase, you know, like the publicly traded company, the most stringent, the law-abiding crypto exchange is going to list Tether. So, you know, it's 100% legit. Let it, let it be. Now, Coinbase is postponing that listing. Is it a bearish signal? Is something sketchy going on behind the scenes? What do you guys think?
I'll jump in there. I mean, I think that there's a lot of FUD around Tether. I don't necessarily buy into it. And especially since you've had the New York Attorney General come in and say, you need to provide these attestations, you need to be showing documents about how much money you have on hand. I mean, it's completely on par with every other stable coin out there right now. You have Gemini or, Pax, you've got USDC. Like, I mean, all of these places, none of them have ever had an audit. None of them have ever been able to secure an audit. That was the main reason for all of the FUD back in the day, because Tether couldn't secure an audit. And people were like, what is going on here? This is crazy. Someone look into this. But the fact is that no company will audit these things because they don't really understand it. They don't want to legally sign their name. So there have been no stablecoin issuers that have been able to have an audit. That includes all of the companies that are regulated in the US by New York Department of Financial Services. So, that Tether is on par with all of the rest of these coins in terms of the amount of financial documentation they have showed. And none of them really have any sort of audit going there. So I think a lot of the FUD tends to be a little bit, I don't know. It seemed to come about when all of these other stablecoin competitors came around. I can't help but be a bit of a conspiracy theorist and wonder how much of that was created. I'm not saying Tether is like a sure thing. I don't know, but we have the same clarity with Tether as we do with all the others. But Zack, I saw your hand go up there.
I just wanted to talk about audits versus attestations as a term of art in the crypto space. So you're true that I guess no stablecoins have reached the level of audit, but I think most of them, most of the prominent ones at least, do have some regular attestations where an accounting firm comes in and says, okay, yep, those numbers look right. They don't do the full audit because you're right, they don't fully understand how to get back into the system and figure out all the numbers, but they do sort of put their seal of approval on having seen and attesting that those numbers, to the best of their knowledge, are accurate. So, USDC came out and did this from the get-go, but Tether has been a laggard in even adding an attestation layer to its reserves, which I think was like just happened maybe like 2 months ago or something. So yeah, Anna, I just want to talk about attestation. It's a fun word, and I'm throwing it back to you.
Yeah, I just wanted to add to what you were saying that Tether's competitors showed a little, more profound attestation of what they have. They would at least list the assets they have to back the stablecoins they issue, while with Tether, it's not even clear what kind of assets they have. It's definitely not all cash, according to it. Well, they didn't provide those kind of details, though, I guess, in the recent attestation.
Details in March that all the others have, right? So now they're on par, but previously I agree. Previously there has been, they have had I think 4 different types of kind of trying to get in the direction of an audit, and each of them haven't really come close because no one's doing an audit. And it's only in March that they really provided on par with what everyone else is providing. But I think now it's pretty clear, but maybe you guys disagree. Will, I saw your hand go up.
Yeah, I think it's just gradations. Every firm does something a little bit different than the other. I think Tether might be more towards the risky side, but not necessarily super risky, because we were on like the safer side of the entire scale. So you have like USDC coin or USD coin is pretty safe. Like they have Circle behind it. There's like an entity created for monitoring the stable coin and making sure that it follows every regulation. Tether's a little bit more to the left, I'd say, but not like incredibly far over. And I think you kind of see that in the market itself, because these stable coins, they're pegged to the dollar, but they can also move around depending on how the market feels about them, which is in itself a sort of like safety valve that the market has created for making sure that these stable coins are truly what they're meant to be, which is $1. So I think like you're right, there's some details around it that are like we probably can't get through on the show, but attestations has been like a pretty recent addition for Tether.
Yeah, I will also add that there's always this element of trust with any stablecoin issuer. Like they're not trustless entities. They're not cryptocurrencies that are defined by code. So if anyone's thinking, well, this is a sure thing because we've got an attestation, I think people should push back on that, because it is really quite opaque how these companies do issue these things, and whether they're licensed and regulated in the US or not, it's still completely murky. So it is a very gray area, but they're a very useful tool, and I don't have a problem with it. I just think people should be cautious when they think about the trust element.
Naomi, I just wanted to add to what you were saying earlier. Not everyone watching might know what FUD means, and that's fear, uncertainty, and doubt. So I think that makes a little bit more sense to our new watchers who don't know all of the crypto lingo.
You should be like a translator on the show in the corner. Sorry, go ahead, Anna.
No, it's interesting actually talking about the trust issue. If you look at how actually the crypto markets work, they are totally based on trust and people like believing that their investments are going to perform well and that the technology going to work out and so on and so forth. And, when I spoke to one person that knows a lot of OTC traders dealing with Tether, and he's like, yeah, well, I keep a part of my wealth in Tether. I know I'm risking. I know I don't have 100% guarantee that it's all backed. But, all these people who are trading Tethers, what are they losing? If one day they realize that Tether is not backed and it's like crashing or whatever, they lose like 1 day of their trading or whatever. And they just write it off. So there might be a fair amount of gambling mentality coming into that trust, mix.
Probably. And speaking of things like gambling, let's change tracks. Bitcoin mixing. We've had a little bit of controversy there. So US officials have apparently arrested the alleged operator of Bitcoin Fog, which is essentially a mixing service for Bitcoin. Roman Sterlingov is a Russian and Swedish citizen. He was arrested on 3 charges stemming from his alleged involvement in this Bitcoin mixing service. He's been charged with unlicensed money transmission, money laundering, and money transmission without a license. I don't understand how the third one is any different from the first one. Sounds like a bunch of the same charge with slightly nuanced wording there, but they love to throw those charges on, don't they? But it might be helpful to talk about what Bitcoin mixing is before we kind of dive into this. But Annika, I'll throw this one to you. Can you explain, just for our new audiences, what Bitcoin mixing services are?
Well, so there are different services that allows you to make your transactions a little bit anonymous, right? One of them is mixers, when different people send their Bitcoin into that service, and they get the portion of Bitcoin out of the transaction, but because many people put their Bitcoin into like one kettle after it comes out, it's very hard to untangle where this money are coming from. So people who are using darknet marketplaces use mixers a lot, because darknet Bitcoin is often like labeled red in blockchain analytics tools, and exchanges can block such outputs when they come to their wallets. But it's been kind of a controversial topic because yes, criminals are going to use mixers because they want to hide where their criminal money are coming from, but legit citizens gonna use mixers too because they want their transactions be anonymous too. And what if at the end of the day all the bitcoins become mixed and you can't differ one from another anymore?
Yeah, I mean, that was really the big privacy feature that all Bitcoin proponents will tout, because Bitcoin is not itself private. It's a pseudonymous network, and your pseudonymous identity it's very tenuously linked. It's very fragile. It can easily be linked to your real world persona. And so a lot of people say, well, you can use other solutions like mixing services. CoinJoin, Gregory Maxwell came up with this idea of making things more private. And so it's really this tool that's important for anyone who believes in financial privacy and anyone who doesn't want their entire Bitcoin, net worth known whenever they, buy a coffee or whatever. So I think it's really important, and it's such a great point that you bring up that, people just focus on the criminals involved. So apparently 1.2 million Bitcoin have been laundered through this service, and they do cite a lot of drug marketplaces. And so law enforcement is saying that because Financial Crimes Enforcement Network did not register this as a money services business, it was not licensed to operate within Washington, D.C. They're coming down hard on this service. And I think, we're looking at lots of crackdowns from government right now. And especially like in these kind of things that try to obfuscate identities or try to make things decentralized. If you look at what Bitcoin Fog actually was, my understanding is it was a custodial service. And that's a very dangerous place to be if you're holding people's money. Obviously, there are decentralized services out there. Wasabi Wallet is a non-custodial service that mixes Bitcoin for anyone who cares about privacy. Electron Cash for the Bitcoin Cash world has a great feature called Cash Shuffle and Cash Fusion, which obfuscate coins. These are all non-custodial. So it'd be interesting to see whether this pushes people towards more decentralized options now that law enforcement has started to crack down, because this is the first time that they've actually started to really dive into this. But Zack, I'll throw this to you.
Yeah, this reminded me of a story last year that we did. Larry Harmon, who ran a mixer called Helix, was arrested over some similar stuff. So it is something that is on the radar of law enforcement agencies worldwide. I think the point that you made, Naomi, about it being custodial seems to be the real criminal aspect of doing this money washing. So yeah, the decentralized ones, I guess like Tornado Cash in the ETH world would be like maybe a decentralized option, that we've seen be utilized by anyone from DeFi hackers to people who are extra mindful about their online privacy. But yeah, I would say it's definitely something to be watching. All right, we're going to change gears. We're going to go to deal flow land. We're going to go to venture capital, and we're going to talk about Alchemy, which just raised a big Series B, $80 million at a $500 million valuation, led by Coatue Management, which is one of these growth capital firms that all of a sudden is in the crypto space. Yeah, I just want to talk about Alchemy real quick because I think they're sort of a quietly important firm in the space. I'll toss this to Will. I think you have some understanding of what they do. They power a lot of stuff behind the scenes that crypto users rely on every day. What does Alchemy do?
Yeah, for sure. So in the back end of a lot of these blockchain applications, there's sub layers that kind of communicate back and forth. So you might think, oh, Ethereum, just like one blockchain and my wallet interacts directly with it. Well, that's not always the case. Sometimes there needs to be some middleware applications, and sometimes there's a lot. It's kind of like a pancake stack of tech apps that speak back and forth to each other and make sure that everything that you're using works really smoothly. And Alchemy is one of those platforms. So it's a middleware application. You can go on there and you can run a node as a service through them. They'll set up a node for you, Ethereum node. I think they offer some other blockchain applications as well, though I'm not sure on those details. And you can launch your application on top of Alchemy, and then Alchemy will speak to the Ethereum blockchain itself for you. The reason for this is because blockchains have a lot of data on them, a ton of data, especially decentralized application blockchains like Ethereum. Bitcoin is a little bit less data heavy. I think it's around 350 gigabytes right now. Ethereum is well past that, and it takes a lot of data and a lot of room on your computer to store your own node. And then on top of that, digging into the node and looking around for files. Like if you've ever tried to go back and look for family photos on your computer and it's just like helplessly lost, well, think about that with all the world's applications and all the world's transactions on it. It's pretty difficult to do. So you get these middleware applications that kind of help sort that information for others. And it's not necessarily super interesting application, but it is very important, which I think speaks to the valuation they got here. It's kind of like how we see custodians in the banking world getting a lot of high profile numbers right now as well. I think we'll see more of these middleware applications get more money going along as DeFi becomes a stronger narrative.
Yeah, and so Alchemy works largely with Ethereum. They also support the Flow blockchain, which Dapper Labs' Top Shot platform runs on. So kind of interesting. And Cotu actually just was also involved in the Dapper Labs funding round, the $305 million funding round not long ago too. So all of a sudden you have this hedge fund billionaire growth capital firm coming into the space and financing some interesting projects. Anna, I'm going to toss this to you. What's your take on the Alchemy news? What does this mean for some of these back-end providers that may not be in the limelight, but are certainly doing the important work of keeping these networks going?
Well, I think, of course, it's important, as Ethereum infrastructure, as Ethereum network is growing, and as all the blockchain networks that are notable now are maturing, it's good to have reliable professional providers out there to take care of those users who don't necessarily want to do all the technical heavy lifting themselves and, run their own node and have all that blockchain stacked on their hard disk or whatever. But I'm kind of an, old school person who believes that if you want to use that blockchain, you should run your own node and take care of it. So, down with middlemen.
Interesting. So this is a middle layer that's capturing a lot of value across the ecosystem, and it gets to some of those interesting questions, right? So I'm gonna throw this to Naomi. I'm curious for your take, Naomi. What are like these swelling valuations of this sort of middleware layer, be it nodes as a service or crypto custody? Like, what's your take on that as it relates to some of the philosophical underpinnings of crypto?
Yeah, I think Anna brings up a really good point. Like they've called this AWS for blockchains, right? AWS obviously is Amazon's, server provider. So you don't have to be running your own server. You can be just using theirs, and you can be running websites and whatever, hosting things. Right? And so, AWS provides an amazing service, and they power over half the internet, and it's fantastic. And the internet wouldn't be what it is without them. And that being said, I'm always wary of things becoming too centralized like that, because if AWS decides they don't like someone, they can get rid of them. And, the more market share they have, the harder it becomes for other people to kind of compete against that. But, I wonder whether something similar is going to happen in the blockchain space. Obviously, I think it's a great service. I think that it's fantastic that we're bringing this to more people and we're expanding, and not everyone can scale on their own. Not everyone can run their own node, right? So they are providing a great service, but it's important to keep in mind that it can be a double-edged sword. So I'd be interested to keep an eye and just see how the blockchain space develops, and whether it does just create these major centralized hubs or not.
All right, cool. We're going to leave it there for today's episode of The Hash. Thanks so much for joining us. I'm Zack. That's Naomi. Anna, thanks for filling in. We have Jen and Will. We will be back tomorrow, same time, same channel, to talk about the latest in crypto news. Hope you're having a good day, and we'll see you soon. Bye.
Bye.